You know how we usually see trading volume just kind of sitting at the bottom of our charts, measured against time on the x-axis?
Yeah, standard view.
Okay, let's flip that for a second. What if we looked at all that trading activity, not by when it happened, but like at what price all those shares changed hands?
Ah, okay. Looking at volume through a different lens. Price, not time.
Exactly. That's the different angle we're exploring today.
Precisely. This is a deep dive into something called volume profile. It's a really insightful tool, I find, especially if you're trading intraday.
Right. So what's the mission here?
Well, the goal is not just to understand what it is, but more importantly, why it can give you an edge.
And
How you can actually practically use it.
use it to make better decisions. Yeah.
Exactly. Informed decisions.
So volume profile. What is it, fundamentally?
Well, think of it as a way to map out important price levels, but it uses volume data to do it.
Okay, but the key difference is that...
The key difference, the twist, is that it organizes volume by the price it happened at, not just the total volume over, say, 5 minutes or an hour.
Okay. That sounds different.
Yeah. To make it maybe click a bit better, think about someone like, let's call him Raju, an onion wholesaler.
Okay, I'm around sure, the onion guy.
Right. Onion prices, they can swing wildly, yeah.
That sure can.
So Raju really needs to know the prices where he's selling the most onions and also where he's selling hardly any. That info's vital for him, right, to handle those swings.
Totally. Know your busy price points.
Exactly. And that's the insight for us traders. Just like Raju, we want to know the price levels where the market is most active. Where are the crowds?
And volume profile helps us see that visually.
Yes, exactly. It pinpoints those exact levels with the highest number of transactions. And these zones, these high activity areas, they're often incredibly important.
Why is that?
Think of them like magnets, areas with lots of liquidity. Buyers and sellers showed huge interest there. So they tend to act as potential support or resistance.
Right, because that's where people previously agreed on value. Sort of.
Precisely. And, price and volume, you can't really argue with them. They're fundamental market truths.
Yeah, they are what they are.
And when you analyze volume against price, not just time, it can reveal some really interesting stuff, like where support or resistance is likely strong, where liquidity is thin.
Thin liquidity.
Yeah.
Meaning price could move fast through there.
Exactly. And you can even get clues about trend strength.
Okay. Now, does this profile look at all volume ever? Or?
Good question. No, it's important to remember it always analyzes volume within a specific time frame, one that you, the user, define.
Okay, so I choose the period, like yesterday's trading or the last hour.
Yeah, exactly. A trading session, a day, a week, whatever you set, it's focused.
Got it. So picture this. You've got your normal candlestick chart price moving along. Where does the volume profile show up?
Right alongside it, usually. It often looks like a horizontal bar chart, like a histogram flipped on its side. And it shows you how much volume traded at each specific price level within that time frame you selected.
And there are specific parts of this profile we should know, some key terms.
Absolutely. A few key things to look for. The most obvious one, usually, is the point of control, POC.
Point of control. Okay, what's that?
Simply the single price level where the absolute highest volume traded during that period.
So the busiest price level.
The busiest, the price where buyers and sellers agreed the most, you could say.
Okay, what else?
Then you have high volume zones, HVZs. These aren't single price points, but ranges where a lot of trading happened.
Right, clusters of activity.
Exactly. And our source mentions they have a kind of gravitational effect.
Gravitational effect, meaning?
Meaning when price enters these zones, it often slows down, like hitting traffic, lots of interaction back and forth before price maybe decides on a direction.
Okay, makes sense. High traffic areas, and the opposite.
The opposite is low volume zones or LVZs. Price areas where very little trading occurred.
So low liquidity.
Right. And because there are fewer orders waiting there, price can often just zip right through these zones much more quickly. Like an empty street versus a busy market.
Gotcha. Fast moves in the LVZs, slower grinding in the HVZs.
Generally, yeah. And one more key area. The fair value area.
Fair value.
Yeah, our source defines this as the price range where roughly 70% of all the trading happened during that period.
70%. Why 70?
Well, it's not a magic number, but it's a common statistical observation. Markets often concentrate a big chunk of their activity within a certain range. Think of it as the zone where most people felt the price was, well, fair, reasonable.
Okay, the zone of general agreement. POC is the peak agreement. Fair value is the broader area.
You got it. Now, here's where it gets really interesting. Interpreting a single candlestick by looking at where it closes relative to that day's volume profile.
Combining the candle with the volume contact.
Exactly. Gives you a much richer picture.
Yeah.
Is that green candle really strong, or is that red candle really weak, or is it just noise?
Okay, walk me through an example. Say, a bullish candle.
All right, imagine a day. Price opens low, maybe dips, but then buyers roar in, push it way up, and it closes near the high. A strong green candle in the chart.
Classic bullish candle.
Right. Now look at the volume profile for that same day. What if you see the fair value area, that 70% zone, is actually located down in the lower part of the day's range?
So most trading happened lower down, but we closed high.
Exactly. What's fascinating is that suggests the buyers weren't just active, they were strong. Strong enough to push price up and away from that main trading zone, that fair value area.
They overcame the gravity, so to speak.
Yes, they established value higher up. And that point of control, down low where the initial battle was fought, that's now likely to act as support going forward. Significant buying happened there.
Okay, I see. The context changes the interpretation. Now flip it. Bearish candle.
Okay. Price opens high, maybe pushes up a bit, but then sellers take over. Bam. Drive it down to close near the day's low. Big red candle.
Looks weak.
Looks weak. Now, check the volume profile. This time, imagine the fair value area is sitting up in the higher part of that day's range.
So most trading happened higher up, but we closed way down low.
Right. If we connect that, it tells us the sellers had enough power to drag the price down and away from where most people were happy trading earlier.
They pulled it out of the high volume zone.
Exactly. And that high volume range up top, that's now likely to act as resistance next time. Lots of selling pressure originated there.
Makes sense. What about like a neutral candle? A doji, where open and close are really close and it's maybe right in the fair value area.
Good question. That raises the issue of conviction, doesn't it?
Yeah, seems indecisive.
It usually is. A doji near the fair value suggests neither buyers nor sellers could really take control. In those cases, a single candle isn't enough. You probably need to look at a bigger time frame or see what the next few candles do to get a sense of direction.
Okay, so context is key, especially for neutral signals.
Definitely. And our source also highlights how volume profile can signal potential trend reversals using a couple more candle scenarios.
Oh, interesting. Reversals, how?
Okay, scenario 1. Price suddenly shoots up really fast through a low volume zone. Remember, price moves quickly there. This happens early in the day.
Okay, a quick burst upwards.
But then, as the day goes on, the momentum fades. Price drifts back down and ends up closing inside the fair value zone.
So it couldn't hold the gains above that high volume area.
Exactly. What's fascinating is that initial burst looks strong, but the failure to stay above the fair value suggests buyers lack sustained conviction. They got trapped back in the main trading zone. That inability to escape the fair value gravity, it can be a strong hint that the upward move is fizzling out. A potential reversal downwards might be coming.
Okay, trapped buyers signal potential top. What about the other way?
Same logic, bearish reversal potential. Imagine price drops fast through an LVZ at the start of the day. Looks very bearish.
Right, breaking down quickly.
But then, by the end of the session, price has climbed back up and closes inside the fair value zone.
So sellers couldn't keep it down below the main trading area.
Precisely. It raises the question, did sellers lose momentum? Did they start covering? Being trapped back inside the fair value after that initial drop suggests selling pressure might be exhausted.
And that could mean a potential bullish reversal is setting up.
Exactly. The market failed to accept the lower prices.
Okay, wow. This adds a lot of nuance. So how do we actually do this? You mentioned TradingView.
Yeah, TradingView is a popular platform that has these tools built in. Our source gives some pointers.
Where do we find them?
You'll want to look for the Forecasting and Measurement Tool section. It's usually in the toolbar on the left side. Click that and you'll see several volume profile options.
Which one should we use?
The recommendation is that the Fixed Range Volume Profile tool is really sufficient for most of this kind of analysis.
Fixed range. Okay, and how does that work?
What's crucial about that one is it lets you define the range. You click on a starting point on your chart, drag to an ending point, and it analyzes the volume specifically between those 2 points you selected.
So I can isolate a specific day or a specific consolidation period.
Exactly. Very flexible. The source uses Coach and Shipyard's daily chart as an example. If you drag the fixed range tool to cover one full trading day, it will visually highlight that fair value zone, showing where that main 70% of trading happened for that specific day.
And you mentioned refining that.
Right. What's interesting is you can often adjust the percentage in the settings. So instead of 70%, maybe you set it to, say, 35%.
Why would I do that?
It helps you zero in on the most concentrated area of activity. Where did that core 35% of trades happen? Gives you an even tighter view of the highest conviction prices.
Okay, pinpointing the absolute core. Now let's connect this back to reversals. That coach and shipyard example. See, it closes a red candle, bearish, but within that fair value zone for the day.
Right. Remembering that bearish reversal pattern we discussed?
Sellers push down, made through an LVZ, but then close back inside the HVZ fair value area.
Yes. If we see that pattern, the red candle closing inside the fair value after trying to go lower, it connects back perfectly. It suggests sellers tried, but couldn't maintain control below the accepted value area. They got absorbed.
Trapped sellers.
Trapped sellers.
Yeah.
And that could indeed be an early signal, a heads up for a potential bullish reversal in the next session.
This seems really useful. How does it apply to different trading styles, like short-term versus longer-term?
Good point. For intraday traders, the ones making decisions minute by minute or hour by hour, analyzing the previous day's volume profile is super valuable. Yesterday's POC and HVZs often act as really significant support and resistance levels to watch today.
Using yesterday's map for today's territory.
Exactly. Now, for swing traders, or maybe positional traders holding for days or weeks, they might look at volume profiles over longer periods, like a weekly profile or even monthly, especially when price is consolidating, just chopping sideways.
Why then?
Because the profile built over that consolidation shows where the market established agreement during that sideways grind. The POC of that whole period can be a really major long-term support or resistance level once price eventually breaks out.
Okay, so scale the time frame to your trading style.
Precisely.
So it sounds like the real strength here isn't using volume profile in isolation, is it?
Absolutely not. It's not a magic bullet on its own.
It's about adding another layer, another dimension to your existing analysis.
That's the key. You integrate the insights from volume profile, where the value areas are, where the POC is, where the low volume gaps are with whatever other tools you use. Trend lines, moving averages, chart patterns.
And when signals from different tools line up.
That's confluence. And confluence can potentially increase the probability of making a successful trade. It gives you more conviction when different forms of analysis point the same way.
Okay, I can see how this adds depth. Now, this might seem, a bit complex if you're hearing about it for the first time.
It can be, yeah. It's a different way of looking at the chart.
What's maybe the key takeaway for someone new to this?
I think what's truly insightful to consider is how this perspective, focusing on volume at price, gives you a different story than just volume over time. It really highlights where the market is putting its money, where the real interest and agreement lie.
Yeah, it's about the where, not just the when of the volume.
Exactly. So maybe just think about this. How might identifying these high and low volume price zones change how you currently look at support and resistance, or how you anticipate potential price moves in whatever market you follow?
It definitely makes you think about those price levels differently, doesn't it? Not just lines drawn from old highs and lows, but areas of actual measured activity.
Right. It raises that crucial point. Once you start seeing the market structured by these volume levels, you think more about conviction. Where are buyers really stepping in? Where are sellers really defending? It adds that layer of understanding market participation.
We definitely encourage you, the listener, to maybe pull up a chart, find that fixed range volume profile tool.
Yeah, just play around with it. Draw it over the last trading day or over a consolidation range you see.
See where the POC and value area line up. See if it adds anything to what you already see on the chart.
Exactly. There's potentially a whole other dimension of market information there just waiting to be explored.